Welcome to Indianomics. I'm Lata Venkatesh. Quite a few indicators seem to suggest that the Capex cycle in India has started. Bank loan growth at over 17% is the highest we have seen since 2013, highest in 9 years. Industrial output data, IIP, suggests that capital goods are growing at a strong clip at 16.8% in the April-September period, almost crossing at an index level their pre-COVID levels. CMIE data shows new investment intentions in the first half of this year, April-September, are up 20% to over 8 trillion rupees compared to year-ago levels, over 20%. Capex bellwether company Larsen Toubro reported a 13% growth in its order book to a record 3.7 trillion rupees when they reported results for the second quarter. The central government's actual Capex spend is 50% higher than it was in the first half of the previous year. This year, first half, it has touched 3.42 trillion. The only lame parameter seems to be state capital expenditure. State government capital expenditure numbers are still subdued at about 1.6 trillion rupees as of end September. Half what the central government has spent. But even this may pick up with the central government giving interest-free loans to the states. So are we at the start of a new Capex cycle, or has the cycle even already started, is the question we are asking. Mr. R. Shankar Raman of Larsen Toubro, Mridul Saggar, former MPC member and now professor at NCAR, and Mahesh Vyas, the managing director of CMIE, the think tank which has the best data on Capex. Gentlemen, thank you very much indeed for joining me. Mr. Shankar Raman, let me start with you since you are the man in the trenches, as it were, literally. What's your view? You have seen previous cycles of crazy Capex demand, the like we saw in 2004, 2008. Are you getting a sense that we are at least somewhere near 2003, 2004 with appetite getting whetting?
Definitely, Lata. I think the appetite is improving because I think the factors that are encouraging people to look at Capex are becoming more favorable. I think India has done well through this pandemic and through this geopolitical crisis to steer its own course. It's been able to keep its capital market intact. Of course, the inflation has been a bit of a worry, and then the runaway prices of commodities when the world supply chain got broken caused certain headwinds. But I think it is to the credit of the government that the series of steps that they have taken over a period of time are all sort of beginning to fall in place. I think the effort to improve the confidence of the industry and the efforts to incentivize production, efforts to localize manufacturing, these are good policy measures. And the fact that the government, central government particularly, is leading the way, and as you rightly said, 50% of the year's expenditure they have already put out in terms of new projects. Since I last spoke to you, I think the state governments have also picked up pace. They are about 30%. Last when I spoke to you, it was more like 20% of that spend. It's now moved to 30% in the month of October and a bit of November. We expect that to gather pace. The private Capex, particularly the manufacturing Capex, have moved ahead further. I think the several areas in which the private sector is beginning to invest. It all started with minerals and metals, where the global prices provided a good tailwind for the sector to increase capacity. But today, with construction activity improving, the construction materials are picking up pace, cement, paint, etc. And also the beneficiary industries, be it in terms of IT industry, data centers, and those kind. And of course, the big mover is the energy. The move towards renewable has also been a large fillip for the private sector.
Got that, sir. That gives us a lot of the nuances, but I'm going to come back with more questions. Mahesh, you have the best data, so tell us what the big numbers are saying. Year on year, the numbers you gave me before the show indicate a growth. But does it look like full-blown growth has arrived?
Well, I won't call it a full-blown growth, but there certainly is is a smattering of good news in many places. So the data does kind of match up to what Mr. Raman was saying earlier. And we have seen a large increase, and I'll call it large increase, in the calendar year 2022, beginning from the quarter of March 22 and then playing on into June and September quarter, in terms of private sector initiatives to propose new capacity formation. So that's a new thing. The slightly not so good news is the government is not matching up to this. So government proposals to create new capacities is very low. Their own Capex is growing quite well, like you said, 50% or so. But that's not going into new projects being announced. So probably they're spending more into announced projects already. But the important thing is that there is a very substantial increase in the number of new proposals being made and the value of new proposals being made, and they're all coming from the private sector. And in the last couple of quarters, we are also seeing a diversification in terms of the business groups that are making these proposals. So it is not limited to the very top end business groups only. In the recent past, it was mostly Ambani and Adani groups and Vedanta and a couple of more groups making the proposals. But now we are seeing a much larger portfolio of manufacturing businesses making new proposals. So that's very heartening.
Okay. No, I take your point. I think just earlier this week, we heard from even the escorts group that they're going to increase Capex. So clearly the number of groups are increasing. Mridul, over to you now. How is the entire macro picture fitting with, uncertainties on the external sector, uncertainties over rates and inflation? As a macro observer, are you getting the feeling that we are on to higher and higher growth? Is it a robust growth cycle?
Lata, let me put it in correct nuance in the sense that while we are bucking the trend globally, I don't think we are going to see very strong growth, but we will definitely outperform the rest of the world. And from the Capex point of view, clearly we are at the start of an investment cycle. But essentially how the amplitude of the cycle and the duration of the cycle will lot depend on uncertainties which exist. So in a global downturn, some effect can come in India. What we are seeing is a slight effect on business expectations of that. If we see the economic policy uncertainty index, then clearly from the global uncertainty point of view, we are at very high levels now. Okay. So we, much higher than what we had seen at the time of global financial crisis. And whereas in India, those uncertainty indices are pretty low, reasonably well performing. It's below 100 economic policy uncertainty index, okay. Whereas in the time of taper tantrum, it had touched 280. In time of global financial crisis, it was in the vicinity of 250 plus. Okay. So we are definitely better off. But the difficulty is we still have to cross the bridge because investment decisions are not one-off decisions. They are a complex combination of business cycle fluctuations, financial cycle changes, economic, political, and policy uncertainty. Where are the user costs of capital? So both interest rates and taxes also impact investment. So we have to wait and watch how that figures out, translates into actual capital.
Just a quick one. What is the uncertainty index? Who puts it out? That's interesting.
Okay, so there is the economic policy uncertainty index, which is done globally. Okay. So this easily available on the website.
Oh, so it's low for us and high for others, is it?
It is low for us, okay. And it is very high for others. Okay. And that's telling. I mean,
all right. I wanted to toss that to Mr. Shankar Raman, actually, who should feel the brunt of uncertainty if it were. Mr. Shankar Raman, the nuanced question I want to ask you is, when you look at these orders and tenders floating around, is it a hope of Capex, or is the Capex already there? And are you seeing any of the uncertainty that Mridul is referring to? Are people checking back, or are they ordering and then waiting, for things to start off?
It's in different buckets. As far as the government programs are concerned, where they are already midstream,
Yeah.
I think they're going ahead and completing the program. And there is also a political milestone that is around the corner with 24 elections. I think
Yes.
it's important that these projects which are announced have been completed. So to that extent, the government capex is moving ahead based on the commissioned state of projects. As was mentioned, I think the fresh awards are getting a little slower because the rate of interest is moving up. The debt markets are reacting. Consequently, the sponsors are willing to wait and watch as to where they're going to pitch their project returns. So to some extent, we can understand a bit of a slowdown. And also the commodity cycle seems to be turning. Much of the commodities are maybe at 80% or less of the peak that they were trading in about beginning of this calendar year. So that is also changing the economics. So from one perspective, I think the government programs moves forward. Private sector, some of those where there is pent up capacity creation, which has been held back in the last few years, are going forward, because I think there is optimism that India will survive this crisis and move ahead. But insofar as uncertainties are concerned, obviously, I think we should guard against policy errors, because I think it's very important to be very careful in good times.
Oh, yes.
Bad times, everybody is careful.
Yes.
So policy errors is something that we should avoid. Secondly, I think the general thrust towards improved productivity is something that the industry, particularly the private sector industry, is focusing on, because skills are getting scarce and the automation is sweeping the world. So it's a double whammy in terms of relearning, unlearning and relearning at one set, and the other set would be to keep pace with the growth in technology. So consequently, I think the capex for private sector, I would like to believe that they have returned, not with full gusto, with full gusto. I think people have burned their hands black and blue once before. So they will wait and watch. It will happen sectorially, but incrementally. I would expect over the next 5 years, the capex to come to its full clip.
Oh, that's a very optimistic note for me to take a break. But some more skeptical questions after the break in terms of the global uncertainty that's looming, as well as, whether demand is good at the bottom of the pyramid. Ultimately, capital expansion will depend on that, on job creation and demand. Those questions after the break.